Welcome to Executive Conversations by the Paypers. I'm Dwayne Gefferie. This episode, I'm joined by Raagulan Pathy, the CEO of KAST. We'll explore whether people are really using stablecoins in their everyday life. And we'll explore how KAST is building the rails that will actually make that possible.
Thank you very much for joining us. Before KAST, you were the Singapore CEO at Circle, and one of the biggest names is stablecoins, of course. What did you see from the inside that convinced you to leave and build something of your own?
Yeah, so I set up and ran Circle business for Asia for 2.5 years, from 22 to 24. What convinced me to leave was that for the history of stablecoins before that, when we 8 to 10 years, stablecoins are always linked to crypto trading. Crypto goes up, stablecoins go up. Crypto goes down, stablecoins go down. But what happened was at some point I could see that people will use this for movement of money, payments, to hold dollars, etc. And so I thought, okay, there's an opportunity now to build something bigger that is not related to crypto trading with the use of stablecoins. A global neobank was, what my thesis was, and that's why I set out to build KAST.
Absolutely, yeah, and especially that volume that you see now in the market is where I think I've seen some big numbers. There's one being as big as $50 trillion being processed, and a lot of that being traded. How do you see that growth now happening, especially with the spending? Where is that actually being spent? Is that actually in retail stores?
Yeah, so the actual spending of stablecoins directly as stablecoins is not so high because the acceptance is not there, frankly. But there is a lot of people who source their money in stablecoins. Either they get paid in stablecoins, or maybe they're converting their local currency into stablecoins so they could use it overseas. Maybe they receive stablecoins for business reasons as well, and then they need to go and spend it. And the most common way to do that is to load it onto a platform and then use a Visa card or MasterCard typically to be able to spend it. And that's the first thing that we enabled, was doing that. We obviously do a bunch of other stuff after that now, but that's the best way to sort of use stablecoins. But the people who are receiving stablecoins for those reasons that I mentioned, that's increasing super fast all the time.
Fantastic. So maybe let's dive a little bit deeper into that, right? KAST, that's your company. What is it that you do, and what's the problem that you actually solve?
Yeah, absolutely. So KAST is a global neobank. We service people in over 150 countries. And when I say neobank, we do the simple stuff such as like deposits. You can send money in cash, or you can send money in stablecoins or crypto. And then we just show you dollars or euros or other currencies. You can also save it. You can spend it via a card. You can send money globally via our payments solution, whether you send it via SWIFT, you can send it via local payment rails, and QR payments in certain countries as well. And then you can also do wealth, and soon you'll get credit as well. So it's everything that you would expect from a neobank. But the difference is that because we hold stablecoins in the middle, as opposed to cash, we're a bit closer to a wallet, and we can serve people in 150 plus countries. Most of the neobanks, the Revoluts, Wise, and others, they typically serve Europe plus maybe about 10 countries. But obviously the world is much bigger than that, and the need for a banking-like solution, a fintech solution, is very, very big globally.
Absolutely. So I think, of course, when people talk about crypto, when they're talking about stable coins, they might imagine a trader, right? Like going in and out of those trades, trading to actually gain some upside whenever they're trading that crypto. However, I think the cash user is probably a different type of user. What is like a typical day for a cash user, and what are they using? What are they using your product for to move money across the globe?
Yeah, so I think that up until 23, the majority of users would be crypto traders, to be honest with you. But today you're seeing stablecoins used as the base layer for people doing tokenized stocks on the trading side. You're also seeing, like I said, people getting paid in stablecoins, people moving money through stablecoins because it's more efficient than banking rails. And so now probably more than half of our users are not really using it for crypto. They just prefer stablecoins as a way to move money more efficiently. In terms of what we see them spending, honestly, it's pretty similar to what you'd see in Amex or high-end Visa. They use a lot for travel, for hotels, for flights, for retail, restaurants, a lot of the normal stuff that you see people use it for. So not that different.
Absolutely. So that user are they oftentimes much more of a crypto native, or are they just living in countries, for instance, where maybe their local currency is a little bit too volatile for their liking?
Yeah, I think this is what often gets confused because there's people who are crypto native, and as soon as you think crypto native, you think about degen crypto or coin traders, is what the public perceives. The majority of people who are in crypto now are more stablecoin natives, and they're using stablecoins, coming in and out of stablecoins with their local currency or other currencies because it's more efficient. They may not be like a crypto trader, but they're using crypto rails to be able to move money more efficiently. So we see our users being more stablecoin native, and some portion of them are crypto native. Yes, they do trade, etc., but not all of them. A lot of them are just more stablecoin native because it's a better way to move money.
Absolutely. I think that's a great distinguish, right? You have the crypto native, now you have the stable native. Really that progression from having users adapt to new technology. And now they're still an early adopter, of course, of the technology, but it's money at the end of the day, of course. Yeah. So I want to talk a little bit more about the size of the opportunity. Like stablecoins moved more than $30 trillion last year, rivaling or even beating Visa or raw volume. Yet real everyday payments were only a few hundred billion of that. When you look at that gap, is it the proof the payments era has barely begun, or sign that getting people to actually spend stablecoins is harder than believers actually can admit?
Yeah, I think for a long time, people were quoting that they were comparing the total volume of stablecoin movement with Visa and MasterCard, which is like comparing the total, movement of bank transfers with Visa and MasterCard. So it's sort of like apples and oranges, right? But, the amount that's being used for consumer and business payments is in that few hundred billion. There's questions of what it is. There's 200 billion, 300 billion, 500 billion, but it's enough, right? And it's probably somewhere in the order of 3% or so of Visa and MasterCard today, right? But the thing is that it's growing very, very fast. It's probably growing 50% or maybe 100% year on year. So even though it's small now, you only have to take a 3% and double it for a few years, and suddenly it's a very large chunk compared to Visa and MasterCard. So I think we've now at a position where people can see this as an alternative, and it's going to grow very fast. And I don't think it's going to overtake Visa and MasterCard within the next 5 years. But if you look at a 10-year mark, it could be, comparable or, maybe overtake it. And I think, it's now on the path to becoming an alternative payment route, but used for consumer payments and business payments.
Absolutely. Like I think just a couple of months ago, couple of years ago, everybody was talking about one versus the other, but now it seems more like they're converging on both sides, right? Where your users are actually spending probably over rails. Are you using MasterCard or Visa when it comes to the
we use Visa now, but we're also working with MasterCard as well. So yeah, both are great.
Yeah, there's also another trend where you see it becomes a lot more agnostic because you're trying to increase the acceptance on one side. But when it comes to utilizing stablecoin spending every single day, what stands in the way of that, right? Like, how do we get more people to actually either save their funds into stablecoins and then spend it? And how do we get to that next level of increasing that spend?
So I will address the first bit about saving more in stablecoins. I think you need more saving options so they can earn interest on it, which is obviously under debate right now as to whether you can have yield-bearing stablecoins in the US. Also, I think there's not that much credit available against stablecoins compared to credit against cash. So that's another piece that's interesting as well. So that's one piece. I think in terms of spending it, the biggest issue is acceptance. Visa and MasterCard have, nearly 150 million merchants. And I think less than 500,000 merchants would accept stablecoins, right? So there's a huge gap in acceptance in terms of stablecoins, which needs to be fixed as well.
So do you believe we need to fix spend or the acceptance of stablecoins in retail locations, or is the mechanism that you're probably using today, and maybe you can dive a little bit deeper into that, where at the moment of spending, you're actually spending fiat, but it's a switch that's being made from your stablecoin wallet into that.
Yeah, I mean, if you look at a business today, it's hard to tell them, oh, you need to accept stablecoins, and then because then they're like, well, what do I do with the stablecoins? I don't have many stablecoins. Only 1 out of 100 users right now may be having stablecoins, right? That'll become 10 out of 100 in no time, and then 50 out of 100 in no time. But right now, you can't expect a business to figure out what to do with stablecoins. So I think they're just looking for solutions so that they can accept it and they still get cash just like if they accepted Visa or MasterCard. So I think there's an aspect of making it seamless for them to be able to accept anything and not worry about it. And then I think that, you'll see some big movement after that.
So that leans probably a lot more into that whole payments interoperability, right? Yes, as a merchant, I just want to accept it. Of course, have reasonable fees on that side. And as the consumer or user, I want to be able to spend wherever I am. And of course, also have as little fees as possible to that.
Exactly.
Absolutely. So I want to talk a little bit about what puts KAST apart from all of the other ones, right? There are a lot of crypto cards or crypto native cards, right? Crypto.com. We just saw the acquisition of Reap of Singapore. You have various Visa crypto cards. Even MasterCard runs their own crypto partner programs, whereas a lot of companies are trying to do stablecoin issued cards as well. For somebody who cannot see the difference, what does KAST do maybe differently, or what's the hardest part of a competitor actually copy that you have been able to execute on?
Well, I mean, don't even worry about crypto cards. I think just look at cards in general, right? Like if you want to go and get a card, Visa card, MasterCard, there's hundreds of choices. So why do you choose one over the other, right? I mean, it still comes down to the full experience. Is the app beautiful? Did the card look beautiful? Is the service amazing? Do I trust this platform so that if something happens, that they'll make sure that I get looked after? Are they running compliance properly and all these other bits? So financial services, ultimately, it's a trust business. It's a software business. It requires, you to deliver the best overall experience. And the card is obviously, one part of it, but it's not the whole thing. Like there's so many other things that constitute a neobank and the whole experience. And we obviously having raised a lot of capital and we're building out everything, right? So you have a full neobanking experience. I think most of the others are just slapping a card onto a wallet and hoping that people will start using it without that full experience. And I think if you go and look at the numbers, like there is, I think maybe 2 or 3 companies, including us, that are taking up around, maximum 5 companies are taking up 60-70% of the business. And then there's probably another 200 or 300 that take up the rest. And I think over time, over the next 12 months, you'll see that, let's call it 5 of us will have probably 80-90% of the business in the crypto card space, if you want to pull it that. And then the rest of the 200 will have 10-20% and they'll slowly die.
So what we're seeing, and maybe you can correct me on that, we're seeing a lot of platforms, companies just launching a crypto card, which is just an extension of whatever application or wallet that they have, versus the approach that you're taking, which is a full-on neobank experience for global use.
Yeah, exactly. It's basically a side project for the majority of people that they're just like, oh, we'll tack this on and it'll work. And they're not worrying about the full end-to-end experience. Yeah. Which means that we've got, 30, 40 people in our concierge team. We've got big compliance teams. We've got, 300-400 employees building all these payment rails. We're getting licenses, financial partnerships. There's a lot of work goes into it, right? Most are not willing to undertake that whole piece. They just want to undertake I'll just put a card in my wallet and it'll work, But frankly, none of the wallets and pretty much none of the exchanges have done that. They've been successful.
Absolutely. So you just already touched on that, sort of like the concierge service, but I want to dive a little bit deeper. You get a lot of attention for the rewards program that you have. You advertise up to 7% yield and up to 3% in cash back. To a normal listener, of course, like whenever you go out and get a credit card or even debit card, mostly don't have it. So that's quite unique. So it almost sounds too good to be true. Sir, I would love for you to take me a little bit more into sort of like plain terms. What is the value what are you actually creating that allows you to be able to provide that type of yield or provide that type of cash back? Or maybe in the way that most of us can understand it.
Yeah, I mean, most of the higher yield and higher cashback is related to subscriptions. So we have a standard tier, which has a lower cashback, pretty standard here. And then when you do the $1,000 a year, or if you're really a baller, do the $10,000 a year, then you get higher cashback. But we essentially, where there's higher yield, we actually put into money to create the gap, right? So we don't do any, still like treasury backed, by market fund backed. So we're not doing it funky with it. We just basically are paid from the gap with subsidy.
So So to clarify, so you put a deposit down, and then on that deposit you earn a yield on that deposit.
Yeah, so we have what's coming now and put a reserve account. So you've got your account where you make, let's say you come out $100,000 in your main account.
Yep.
You put 50,000 in your reserve account, and depending on your subscription tier, you'll get a certain amount towards it in interest, right? And maybe why, so 4% all the way up to 8%, but that has a set cap. Like you do the first 50,000 or first 200,000. After that, it drops back to the standard rate. And then we basically are subsidizing that cost, right? But it's part of that subscription tier, the benefits that come with it. Some of the other benefits that come with it is also cashback, but also airport lounges and all these other benefits that you see as well.
Absolutely. And it's quite unique because normally you have credit card companies who are offering those type of solutions, but you're essentially not a credit card company.
Yeah, it's sort of very similar to what you would see in Amex or Bay, different subscription tiers. We're doing a similar thing, but within the space.
Fantastic. That's a great one. So you've built a consumer business, right? You have a consumer product that people really love, but now you're also moving into business payments and a payroll with KAST business. Some founders would probably call that two different businesses. Why is that a focus rather than just
No, they're actually very related. And I'll tell you why. Is that we found that 25 to 30% of spend was for business reasons. And it was happening with what I would call like solopreneurs to SMEs up to 100 people. And we were seeing them, they were paying for subscriptions, cloud and airlines, hotels. So the things that you could kind of see, okay, they're using it for business retail, but maybe personally. And so that's what made us open, the business platform. We also wanted to make sure we had good payments so that people had good money and stuff, they could do it on business. And what we find now is that we initially had 300, 400, 500 people on the wait list. Now we've got, last check every year goes on 300. I think it's 3,000 bits wait list. And so and because of the demand we have already through consumers, they're like, I've got a business. I was just waiting for you to give me a business version, right? So we're building for what we already see as demands or the customers are asking for it, the consumers are asking for it because they've got businesses. So we're just delivering them what they want.
Seems like a very data-driven approach, right? So I think oftentimes when a recent new card programs launch, it's a lot of hype, a lot of the latest trends, but it seems like you're really driven by the actual data, the actual spend that's happening within that. What have you done to put yourself in a position to be able to utilize the type of data and actually make decisions on that?
Yeah, I mean, we can obviously see it. One of the advantages is we've got $5 billion at annualized volume through our platform. And so we see a lot more scale. And so now we can see for a lot more things. I mean, we're just turning 2 this year. But before we wouldn't be, 2 this in 1 month's time. But we don't, at the beginning we couldn't see that. Now with a bit more scale, we can see more things and we can see what customers want. And now it's the perfect place to be because then we can build what customers want.
Perfect. So I want to dive a little bit deeper into the payroll aspect because I think that's extremely fascinating. You have so many different payrolling platforms happening, but imagine I have a small company. I have a couple of people on a global scale working in different companies. What is broken for them today, and how does KAST sort of come in and change how I can actually run that pay?
Yeah, I mean, I think the biggest issue is that you have to have a bank account in your country, and that the country may not even be where you set up your entity these days. So, often people may have a BVI or Cayman's entity, they may have a Singapore or Hong Kong entity, or somewhere they live in another country, so they've got to get banking for the entity where their country is. And then they're paying people, if your company, we have 300 people, but we have 35 different countries, right? Some people want to get paid in Stablecoins. Some people want to get paid to their bank account. And there's lots of variations. Some people want to be through an EOR set up in their country, which we do. Some people are straight contractors. So it's a big mix, right? There's no platform really set up for that new type company. And that's just actually what we built.
Fantastic. Yeah. So I think you raised $80 million. Right? On a Series A. And within that, I believe you are trying to target the US, Latin market, and the Middle East. Those are all 3 very different markets.
Yeah.
How do you decide where to push hardest over the next couple of years?
Well, we already see the demand in these markets, so we're just following where the demand is. And so it's really just scaling out where we've already got users already. And that's essentially what we're doing.
And what is sort of like what is that data point that you're seeing? Is it that volatility in the market where it comes to currencies where people are looking for?
No, I think it's just these three places in particular are very dollarized, and so that's the biggest. They want to move dollars in a more efficient way. But also we've got users in Europe, and I think Euro stablecoins come big as well.
Do you see that in your future as well to try to utilize European stablecoins and other?
Yeah, we're just introducing it now. We've got Euro, the ability to hold euros as well. So yeah, we're seeing that as well.
You describe global compliance as a competitive edge rather than a cost. If you would make that case, why does being licensed across so many different countries actually help you win rather than slow you down?
Yeah, so we at the beginning when you don't have many users and you can rely on your partner licenses. But the downside to it is that you obviously give up a bunch of margin to your partners, which means you have less economics to be able to share with your users through incentives and other means. But the second thing is mostly through reverse solicitation. In a lot of countries, you can't actively solicit. Holding licenses, you could go and market directly to users a lot more. You can also build your own infrastructure, which means that you own more of your own rails and have better margins as well.
Which licenses do you currently have?
We've got 8 or 10 different licenses across the world, but through a process of acquisition, we hope to expand that footprint to 30, 40 different licenses.
So pretty much European, a couple of key countries, but then also within Europe, you can passport a lot of that throughout Europe as well.
Yeah, exactly. So we will expect to have full MiCA very soon, and we'll be having our EMIs, VASPs, and UK as well. We're a bit in UAE, Middle East, Canada, the US, hopefully 48 FTLs, within a year, and then later license.
You're open at KAST is not a bank, so if for the ones listening, if a stable coin you rely on slipped in the dollar's value, we've seen that in the past before, or one of the partners ran into trouble, what happens to that person who has their funds sitting inside of a KAST account in the market?
Yeah, so what we actually do is that we, as people deposit USDT and others, we actually turn it into we're now turning into USDK, which is our in-step point, which is reserved through money market funds like BlackRock and others as well, right? So, and Treasury as well, right? So that's the way that we make sure that it's secure rather than just fully relying on partners. But I would say now, like USDC in particular is very safe as well. Yeah.
Okay, perfect. You're on a tremendous journey already. You've raised $80 million. You're growing globally, of course. For most of your users, KAST is probably already replacing their bank account. Or is it much more that it's the backup to their traditional bank account?
So I would say that traditionally we'd been the backup. I don't BS it. But now what we're seeing is that a couple of years in, as we have more and more usability for the platform, you can do more than deposit stablecoin, spend a card. You got bank accounts, you can move money, you can do savings, wealth, etc. Now we're becoming the primary bank account for a lot of people, especially those people who have business as well, because they'll have the business account and the main account, and then we become their mainstay.
Fantastic. Yeah. So you believe the next billion people will actually bank differently. What do you understand about money and those people that most of the people in this industry are probably not seeing?
Well, I don't believe that someone who is sub 25 or sub 20 will come into a world where they'll be like, okay, I'm going to go and get a job in my country and get paid in my local bank account from my local company. That would probably only be maybe 50%, or maybe it's more, maybe 60 or 70%. But a good percentage, whether it's 20%, 30%, or 50%, will come in and work for a global startup or global company. And they will have different banking needs, and they may not even if you're here in the Netherlands, they may be like, I know plenty of Dutch people live in Bali and other places. They may just be like, okay, like I've got this job, but I don't need to live in the Netherlands. I might go and live in Bali. I might go and live in Dubai. I might move around, work remotely. So they're just coming into a world of opportunities, of companies built in a different way. They live in different places. They're not the people from 20 years ago, even when I was, around that age, where you go in and you get a job in one country and then you got one bank account, you know. So I think their banking needs are just different from day one, you know, and the businesses they work for are different, you know, and that's why that billion people will, even if it's not a billion people today, over the course of the next 10 years, there's going to be a bunch of people who are just like, well, the current banks don't work for the life that I'm living, you know.
Yeah. So to close it off, I always like to ask my guests about the future.
Sure.
And not just, hey, the future's all bright, but what needs to change in the future for you to excel, for KAST to excel, for basically the business that you're operating in to do a lot better? What would have to change? Would that be something on the regulatory side? Would it be that adoption towards stable coins? What would that be if...
Yeah, I think the move on, look, when I started in stablecoins, there was no stablecoin legislation. Now there is, but I would still say it's rather imperfect. I think the US making a big move, but let's see where the eventual legislation around Genius and Clarity lands. But essentially, I think that will help force a lot of other people to move and to integrate it. But we need stablecoins integrated in the financial system. We need banks to be able to accept it. They need to be able to move money in and out of stablecoins via the banks. So that's really the biggest thing that needs to happen, because realistically, people are not going to come and live in a pure stablecoin world, but they're not going to also be living in a pure fiat world. It's going to be this hybrid for the next 10, 20 years. So removing that friction of allowing that hybrid life to live together, you know, that's essentially what needs to happen to unlock stablecoins, but also make just moving the money easier, right? It's not just about stablecoins. It's also about people being able to live for the life that they actually live.
Awesome. Well, thank you very, very much for joining us here at Executive Conversation. It was a pleasure talking to you.
Likewise.
If you like this episode, hit like, follow, and subscribe for more.